If you're a corporate small business owner that either has or will be getting, or you're contemplating introducing a family trust and a holding company into the mix, and this structure, by the way, is called a purified structure, then this video is for you. So this video is a very, very specific audience that we have in mind. So if this isn't you, I have a crap load of other videos that you'll be interested in. So check out our channel, but this one likely will not make any sense to you. You can stay though. Now, if this is you, may I first suggest you watch this video that I did up there in the link. It's titled Too Much Money in Your Company and What to Do About It. This is a prerequisite watch if you're either new to this structure or if you're contemplating it. If you've had a purified structure for a while, simply continue to watch. This video is a must. But first, if after you've watched this and you've found this helpful, please like and comment. This will help get me this stuff out to more small business owners. And make sure you're subscribed and notified. If you're not a swaying client, book a call because I'd like to do something about that. Okay, so by now you're somewhat acquainted with the importance, like the severe importance of keeping your operating company pure, a lean, mean operating machine. You also know that you need to draw money from your company to fund the personal expenses for living. So what is the proper flow of money from your operating company to either you or your holding company? Okay, let's start with money you want to park in your holding company. So this is usually excess money that you don't really need in your operating company, but also don't want to pay it out to yourself and say goodbye to a crap load of tax. And by the way, check out this video I did on using the CRA to fund your retirement. It's right up there. So here's the money map. The money will travel from your operating company into the trust's bank account. The money will then move from the trust's bank account into your holding company's bank account. And from there, you will get that money invested with your investment broker in line with the planning you would have decided on with that professional. As long as you flow everything this way, your accountant will make sure all the right resolutions and T-slips are prepared. Your job is to just not take any shortcuts on this map. It is silly, but the CRA are going to be looking for the paper trail, proving that you took the right route to get the money over to the holding company. So let's just humor them and do it right, okay? Now, what if I want to take a dividend from my company? It'll take the same route, but instead of ending in the holding company, it'll go from your operating company to the trust bank account and then into your personal bank account. And again, your accountant will ensure all the right compliance with CRA reporting requirements are upheld. Now, what about a salary from your company? And this is a good time to reference another video I did on ways your company can pay you. It's just right up there. Okay, so salary. Now a salary you can just pay directly from your operating company out to you directly. There's no need to involve the trust or the holding company here. Now here's a question I get all the time, which is, what if my operating company needs to get back some of the money I moved over to the holding company for whatever reason? Okay, this can be transferred directly back to the operating company. There's no need to go back through the trust, okay? Think of it this way. Moving from the operating company to your trust into the holding company, it's a one-way street. You never have to go backwards on this. Going back to the operating company can just be lent back to the operating company. And as a side note, it's really cool when you start to become your own banker in times of need. Now, do we ever want to leave money or investments in the trust? And that's a great question. And the answer is generally, hell no, except when you need to cover trust expenses like bank charges or professional fees. There's no other reason to keep any more money than that in this kind of trust. And you never want to invest your money through this kind of trust. That is what the holding company is for. Now, the last thing I'm going to mention is more of a philosophy on best practices when it comes to investing. So now that you're more aware of proper mapping of the money, I would encourage you to get a good rhythm of money flow with your investment advisor. Like, here's what I do. I have an agreed upon monthly payment that my investment advisor will receive from my holding company every month. You can always adjust this for circumstances that arise from time to time, but this rhythm will not only help you keep your operating company pure, which is sort of the primary goal, but there's a major secondary goal to doing more frequent investing into the market, and that is called dollar averaging. And this concept basically means that folks will generally obtain the best price throughout time on stocks because they're not entering the market at volatile times. And You know that the market has its ups and downs, and these ups and downs are called market volatility. Now, it's really nice when you can purchase stock when the price is lower, but it's not so nice when you purchase stock when it's pricey. Well, if you buy smaller batches of stock more frequently, you sort of reduce this price volatility by averaging out the ups and downs. And it really is the best practice. And I'd like to say that this is the way all the cool people are doing it, but really it's what all the nerds like me are doing. And if you haven't figured out by now that it's the nerds that are truly the actual cool people, then get with it, eh? And own your geekness. Okay, that's it for me today. So stay pure and stay nerdy. Until next time.